Some new retail data just out. Steve Liesman has those numbers for us. Hi, Steve.
Good morning, Becky. Yeah, after a strong holiday shopping season, looks like consumers took a little bit of a break in January. The CNBC NRF Retail Monitor, we use credit card data from Affinity Solutions, registering a modest decline in January. Retail sales ex auto and gas, that's our top line number, down 0.2%. That's after a 0.4 gain in December and 0.7 in November. Year over year decline to 2.3 versus 3.1 in December. Core retail, that removes restaurants, down a little bit less, 0.04. You'll see why in a second. That's against 0.2% in December. The year over year, though, increasing to 3.2%. The January decline, though, follows two strong months right in the heart of the holiday season, so that was good. But it could challenge, we don't know yet, some of the GDP forecasts for this quarter of around 3%, especially if that weakness is repeated in February. Here's how we got to the negative number. Gas station sales falling minus 1.3%. I will tell you that sometimes you get a decline one month in gas sales and some of the discretionary stuff goes up the next month. Right now, furniture and home furnishings were down 1%. And then you had a decline in food service and drinking places that could have been hurt by some bad weather this month. But clothing and accessories were up. Non-store retailers, that's your internet, that was up. And electronic appliances had a good month, up 1.3%. Here's the way you can see how the CNBC NRF Retail Monitor, they've tracked with the government data. Forecast looking for a 0.2% increase ex autos and gas. That'd be reported by the census for January on Thursday. Now, depending upon where January inflation numbers come in tomorrow, that is, so make sure you tune in at 8:30, this number could show that real consumer spending was flat or even negative for January. Watch to see if this is the beginning of that slowdown that's long been expected but hasn't yet arrived, as you know, Becky.
Yeah, that I think is the big question. I mean, as long as the consumer hangs in there, as long as the consumer is strong, I don't know too many people who think we can head into a recession. I guess it's 70% of the U.S. economy is consumer driven.
It's a big chunk of it. And look, let's not get too carried away with this 0.2% decline, because remember, what we're looking at for the quarter, the reason why some of those GDP forecasts are so high is you raise to the level of December, and if you continue it more or less in January, it's still pretty strong. So we're not going to really, raise the probability of recession based on 1 month in January. But it is interesting they took a bit of a break in total in their spending. I'm waiting to see, Becky, to see if some of those housing-related sectors, the furniture and homes, some of the building materials, if they start to come back. We've had a little bit of loosening in the real estate sector, and that's been a real laggard. And it's been interesting to see retail do quite as well as it's done with all those home sectors lagging behind.
You know, Steve, the one thing I've been thinking is we look at all this data and we keep looking for the next thing to happen. But the last few things that happened shocked the consumer because it was something we hadn't been anticipating, whether that was COVID, whether that was the financial crisis that started somewhere else. I mean, we can watch the consumer, and that's a great indicator, but the consumer's strength and confidence can drop off incredibly quickly if there's an external event.
I think that's right. And I think, let's look at employment, which has been, as you know, stronger than many expected. Wage gains have been pretty decent, in fact, higher than the street was relatively comfortable with. So you're right the way you frame the question as well, because it takes a shock in order to derail the economy. And so far, it's interesting to me. Obviously, you have to really be concerned about the flare-ups in the Middle East. It has not caused the kind of shock that perhaps other kind of events that way, say 10 or 20 years ago, might have caused. We've talked about the issue of so much of our energy comes both from the United States and from North America, so it's disconnected a bit from what's happening out there. It can be replaced. That's one aspect. You do have some fall off this year, as you know, in federal spending. It's been very elevated. It will end up being, many believe, a drag this year. That could have some impact. But you're right to look at a shock, which is to say, Betsy, you got to screw it up for it to go wrong.